traditional auto manufacturers are going to have trouble keeping up with the price declines that Tesla's technology is enabling.
From Tesla being on the brink of bankruptcy to now shows that a lot can change in only a few years. And Tesla stock has been an absolute parabolic monster so far in 2023. But what we have witnessed so far is nothing compared to what Tesla will achieve going forward for the rest of 2023. And in fact, I'm extremely confident that Tesla will become the most valuable company in the world within the next 5 years. And if you just give me a few minutes of your time, I will tell you how. You see, Tesla right now is sitting at a market cap of $600 million, and saying that they're gonna become a $1 trillion company is a very big claim. And I actually believe that they will accomplish this within the next 5 years. But seriously, in this video, I will go in depth and break down exactly how Tesla will become more valuable than Apple in the next 5 years, and the two major catalysts that will have a massive impact on Tesla moving forward. And be sure to stick to the very end, because there is one big event that is happening right around the corner that many people are not paying attention to, which could signal the beginning of the bull market. So you're not going to want to miss this one, because I will also be covering when exactly I think the best opportunity will be for you to pick up some more shares if you already invested or if you just started investing in Tesla. We are covering a lot in this video, so get excited and strap in for the massive ride. So really quick, before we get into the good stuff, if you could just smash the like button, as it really helps the channel grow, and I spent a lot of time making these videos for you guys. So with that being said, let's get into it. Now, if you have been watching my channel for a long time and have been a subscriber, you have probably watched my video where I first recommended buying Tesla back in December, and this was when Tesla was less than $120 a share. And if you bought in at around when Tesla was trading at around $120 and have held like every long-term investor out there, then you are up 50%. Not to mention that Tesla is up over 800% in the last 5 years, and it's up over 14,000% since it went public, which is insane to make that kind of profit from any investment that fast. Unless, of course, you're in crypto. But that'll be for another video. But listen, this is one of the main reasons why Tesla makes up a big portion of my stock portfolio, and why I'm holding Tesla for at least the next decade, and why I'm not definitely selling any of my shares, and I'm always looking to buy more shares myself, because Tesla is just getting started, and it's destined to be a $1 trillion company much quicker than most people actually think. Now, I think we can all agree that Tesla is one of the most powerful companies out there, and we can expect no less from a company that is being led by Elon Musk.
Elon is on a different battery cost curve decline. Auto analysts made fun of him. If they do not switch over to this kind of battery technology, they will not be able to catch up with Tesla in terms of price declines.
Now, I want to share with you all the good news that we got from Tesla this week, because there are still many of you that think Tesla is going down to $50 a share. But look at this. Tesla's China January deliveries have been stronger than expected. Not only that, but all Model Ys are now eligible for the $7,500 EV tax credit. And with that being said, I think that one of the biggest and costly mistakes that investors often make when trying to evaluate a company like Tesla is that they usually stick to methods that are very old in terms of valuing the stock. And those are the same investors that have been telling you not to buy Tesla since 2013 because they thought Tesla was extremely overvalued in trading at a super high multiple. And the stock just did not make sense for them.
Argued that a lot of the negativity has already been priced into a stock that's lost 2/3 of its value since the highs that we saw. Are they right?
Hey, thanks for having me. Great to be on the show. I think that viewpoint is dead wrong, and let me explain. So Tesla is currently valued at more than the next 3 largest automakers combined, despite selling just 5% of the cars that those automakers sold in 2021. So what's that mean? That means Tesla should be seeing tremendous growth in its quarter-over-quarter shipments and year-over-year shipments. So what are we seeing? Here's the problem. Tesla has now engaged in 2 margin-slashing price cuts in the U.S. in Q4, 5 margin-slashing price cuts in China in Q4, 1 margin-slashing price cut in Europe in Q4. Despite that fact, based on their guidance for the 3rd quarter in a row, they're going to produce more cars than they sold. That's a record. They're producing more than they sold, which means they're not selling everything that they're making. Despite all of that, their lead times have collapsed, and they have 2 plants running at 20% capacity, Berlin, Texas, and 1 running at 93% capacity. This is a company, it's just a car company. 95% of revenues from selling cars, 5% from an energy division that loses money. They're just a car company that's built too much capacity that they can't sell. And that is a big problem.
And you know what? I'm so glad that I didn't listen to them. Because when you look into a company like Tesla, and when it comes to evaluating a company like Tesla, you have to look beyond their financial statements. Because yes, finances are great in the short term and long term, but you also have to know how to properly look at tech, software, solar, battery, and the list goes on. And all of those are part of Tesla's business model. But the next catalyst for 2023 is gonna be a big part of the Tesla master plan, and that a lot of people are gonna miss, which is the fact that the Tesla Cybertruck will increase demand tenfold. Because this sort of innovation will drive potential customers to Tesla stores in the Tesla website, even if they have no interest in driving the truck. This is the type of event that gets attention and brings attention to Tesla. And that's exactly what happened in 2020 when the Model Y came out, and that's exactly what's going to happen with the Cybertruck. And just imagine the crazy numbers that they could potentially do worldwide, especially in massive markets like China. And let me point out that we're not even talking about some crazy futuristic technology that won't be available for another decade or two. Now, for those of you that are regular viewers of my channel, will know that I'm a huge fan of ARK Invest. They're always thinking, they're always analyzing, and their awareness of innovation always turns into greatness. And if you can't take my word for it, then take Tasha Keeney's word for it, who has been repeatedly banned on several interviews preaching about Tesla and their robotaxis and how it's going to be a $9 trillion market just waiting to be captured.
The other question from our audience for you is, what does Elon Musk have to say on March the 1st at the Investor Day to convince us of that future that goes beyond Tesla just being a car company?
Well, like I said, I mean, I'm excited to hear more about the autonomous vehicle. They had said that they would mass produce a purpose-built autonomous car in 2024. We think that this could totally change Tesla's business model. You know, our price target for 2026 split adjusted is around $1,500 per share. I think over 60% of Tesla's enterprise value, you know, could be attributable to that autonomous ride-hail platform. I think it'll have attractive software-like margins. It'll become a recurring revenue stream as opposed to, you know, one-off vehicle sales that we see today. It's going to totally change the game, and they're way ahead. I mean, we see that they have nearly 1 billion miles driven in full self-driving beta. They have millions of cars on the road collecting data. That's much more than competitors.
And also keep in mind that I didn't even have a chance to touch on how I think Tesla solar energy will absolutely revolutionize the energy sector and throw out the biggest players in this legacy industry. But with that out of the way, one of the biggest catalysts this year for all stocks, especially Tesla, will be the macro environment. So what can we expect from the markets this year? Well, let's aggregate some data all the way back to 1954, which you need to start paying attention to. And this is historically bullish, meaning we see massive gains from stocks. You see, one piece of good news could have a snowball effect on the markets and get things moving again. And that's where the midterm year comes in, the third presidential year. And we also saw some good signs of improvements on inflation data, which are enough to have started this mini rally in the markets. And again, inflation has already peaked in June of last year. But going back all the way to midterm elections, which happens at the midpoint of a presidential term and usually results in the president's party losing ground in Congress, well, the returns for the S&P 500 index since 1931 shows that throughout the midterm election years, the stock market turns out very positive. And since 1950, the average one-year return following a midterm election is 15%. And the data does not lie, and you can keep saying, well, this year is going to be different, like people have done every 4 years. I mean, we've had wars, 9/11, the housing market crashes, recessions, pandemics, all of which at the time seemed like the worst ever. And midterm election years usually start off with a drop, and then we rally really hard, and this aligns perfectly with what is happening right now. We had a terrible year in 2022, so far with risk assets, and now we are in 2023, which is the third year of a presidential term. And we are more than likely going to see the Fed pivot on their policy sometime at the end of this year or perhaps the beginning of 2024. But still, what we know from history is that stocks will recover, and if we do see a pivot from the Fed, inflation starting to come down, then risk assets could recover faster than expected. So buckle up, because that is exactly what we have been seeing from risk assets. Not to mention Tesla is up over 50% since the beginning of the year. So with that in mind, so I want you guys to let me know in the comments below, are you buying Tesla right now? Are you dollar cost averaging, or do you believe that Tesla still will go down to $50 a share? And again, thank you guys so much for watching. I really hope that you got value from this video, and if you did, then please make sure to give it a thumbs up and subscribe for more videos. Until next time.